Imagine a world where data is the new oil, and the engines refining it are massive, humming fortresses of silicon and steel. This is the world Milton Todd, Alt the Three, envisioned when he began, orchestrating the transformation of a diversified holding company into a laser-focused technological powerhouse. It wasn't just about business. It was about survival in a digital age. He saw a coming storm, a global shortage of computing power, and decided to build the shelter. From the early days of varied investments, the vision crystallized into a singular, powerful entity, Hyperscale Data Inc. This wasn't an overnight success, but a calculated evolution, born from the realization that the future belongs to those who control the infrastructure of the internet itself. The journey began with a bold pivot, shedding legacy assets to focus entirely on the high-stakes world of data centers. Critics might have doubted the strategy, but the leadership saw the writing on the wall. They understood that as the world digitized, the demand for processing power would outstrip supply. The company didn't just grow, it mutated, shedding its old skin to emerge as a streamlined beast designed for one purpose: to house the digital brain of the future. Every server rack installed was a brick in a fortress built to withstand the exponential data demands of the 21st century. As the company expanded, so did its ambition. The workforce grew, attracting engineers and visionaries who wanted to be at the forefront of the digital revolution. They weren't just hiring staff. They were building an army of believers. The Michigan facility became the crown jewel, a sprawling complex humming with the sound of thousands of machines working in unison. This wasn't just a warehouse for servers. It was a cathedral of computation, the relentless drive to expand capacity, to upgrade power systems, and to secure energy contracts showed investors that this team wasn't playing small, they were playing for keeps. What truly set them apart was their refusal to be categorized as just another landlord for servers. They understood that the value wasn't just in the real estate, but in the capability of the hardware inside. While others were content with basic co-location, Hyperscale Data was preparing for high-density computing. They anticipated the heat, the power draw, and the complexity of next-generation workloads long before they became industry standards. This foresight allowed them to position themselves not as followers, but as leaders ready to capture the wave that was just forming on the horizon. Now let's talk about the number that has everyone whispering: 30 cents. To the uninitiated, a stock price of 0.30 might look like a bargain bin sticker, but to the seasoned eye, it looks like a coiled spring. When you look at the sheer value of the assets, the Bitcoin treasury, the physical real estate, the millions of dollars in high-end hardware, and compare it to the market cap, a discrepancy appears. This valuation gap is where the opportunity lies. The market, in its inefficiency, often takes time to catch up to reality. Experts looking at the sector see a massive repricing event on the horizon. The demand for AI compute is not slowing down. It is accelerating. We are in the early innings of a multi-year cycle that will see trillions of dollars poured into data infrastructure. In this environment, a company trading at such a low multiple relative to its assets presents a scenario that is hard to ignore. The current price reflects the past, not the future. It reflects the uncertainty of the pivot, not the certainty of the demand. Imagine standing on the ground floor of a skyscraper before the elevator is installed. That is what 0.30 represents to many analysts watching this space. If the company continues to execute its roadmap, acquiring more Bitcoin and deploying more GPUs, the math simply has to catch up eventually. The potential for a squeeze, where the stock price rushes to meet the intrinsic value of the company, is a narrative that is building momentum in chat rooms and trading desks alike. This isn't just about a stock going up. It's about a market correction in favor of the bold. The fear of missing out, or FOMO, is a powerful driver, but in this case, it is grounded in fundamental shifts in the global economy. We are moving from a world of abundance to a world of scarcity. Scarcity of power, scarcity of chips, and scarcity of data center capacity. Hyperscale Data owns all three. Holding a ticket to this show at 30 cents could be the kind of decision you look back on in 5 years with either immense pride or deep regret. The window to enter before the institutions wake up is narrowing every single day. The Bitcoin treasury adds another layer of explosive potential. By holding a significant amount of digital currency on their balance sheet, the company has essentially pegged a portion of its value to the performance of the world's leading cryptocurrency. If Bitcoin surges, Hyperscale Data's book value surges with it. This dual-engine growth model, operating profits from the data center plus capital appreciation from the Bitcoin holdings, creates a unique leverage play that few other companies can offer. You are investing in the shovel seller and the gold mine simultaneously.